Hello, Chart Watchers, and welcome to this Tuesday, May 15th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market down today. The Dow Jones has an 8-day winning streak, and it is on the line and struggling right now. The Dow Jones down 228 points. The S&P 500 down 22. The NASDAQ down 70. And the Russell 2000 up 1, continuing to show that relative strength and resiliency. 10-year Treasury yield breaking out, up nearly 7 basis points today, 3.06%. This is the highest level since July 2011. We have not had a close over 3.03% in the last 7 years. Volatility index is on the rise with the market selling off. You can see the VIX back up about 1.5 points to about 14.5. Financials having a mostly positive day, which you would expect with the yield rising, but that is the only sector that is up. Insurance companies tend to do well with higher Treasury yields, and you can see that that group is leading today along with banks, which also tend to do well with rising Treasury yields. The healthcare group, after a 4 or 5 day period where you could see we had very strong action to the upside, giving some of it back today after printing a double top on Monday. The medical equipment companies within the healthcare space leading to the downside after they recently had a breakout. I'd watch that rising 20-day there. Technology also coming off a very strong run here over the past 1 to 2 weeks. Appears to have topped near term, down today a little bit more than 1%. And again, I would watch that rising 20-day moving average for support. With that, let me bring in my co-host, Erin. How are you doing this Tuesday, Erin?
I'm doing great and very thankful to have you back today. I always realize how much you actually do during the show behind the scenes when you're not here. So I just want to say thank you for being back.
No problem. I know you were in good hands, though, with Mr. Fraser. He's always fun to have on the show, and I'm sure he had a lot of great information for everyone.
Oh, it was great. I do like having different co-hosts, though. That does make things interesting. But yes, I'm doing quite well. 70s all this week in California. Can't complain.
Well, I tell you, I've got to mention it. I know.
Got a big game tonight.
2-0. I mean, we swept Tampa in Tampa. And there's a stat that I saw that says in the conference finals and semifinals, teams that have gone out to a 2-0 lead have won the series 39 out of 41 times. Now, I don't need to jinx my Capitals because they've been jinxed enough over the last 4 decades. But things are looking pretty good right now. Coming back home tonight for the first of 2 home games. And literally, if we don't lose at home, we close it out on Thursday night and go to the Stanley Cup final. So I'm pretty pumped up about that.
I'm really excited for you guys. It's nice watching. And of course, I'm still glued to the TV as far as the playoffs are concerned. So really interesting. And Vegas played a great game last night, tying the series up. So
yeah, it would
anyway, enough of hockey.
Well, one more comment. It would be very ironic, I think, if Vegas were to play the Capitals in the Stanley Cup finals, because Vegas, this is their first year. They're an expansion team, and the Capitals have never won the Stanley Cup, and they were an expansion team, I think maybe 42 or 43 years ago. It was back in the mid-'70s. Never won the Stanley Cup. So one way or the other, one of those two teams would be winning their first Stanley Cup ever. But for Vegas to do it in the first year would be pretty amazing.
Yes. And, Winnipeg is looking pretty good still, too. It'll be interesting to see who comes out. But yeah, I'm pleased, honestly, that we are going to get some new faces in the finals, no matter what.
Yeah, one new face is what I'm looking for. Anyhow, go ahead through the schedule and the agenda.
Absolutely. Now that everybody's made it to the room, a weekly schedule we're going to have tomorrow. We have Dan Russo, from Chaikin Analytics. He's been doing a show in the mornings that you should check out. I think that is at 9:15. 6:15 on the East Coast. Anyway, check it out. Julius DeKempener will be here Thursday to talk RRG. And finally, on Friday, we have everything stock charts, and somebody for the mothership will be there. And then on the 19th, on Monday, you get to have a guest co-host, and you get Julius for 2 days on Monday and Tuesday.
Yeah, that'll be fun. Julius is, of course, the author of the RRG charts, the relative strength. He talks a lot about relative strength when he's on the show. And of course, we always are talking about relative strength. So it should be a couple of days of relatively good shows, I would guess.
I would hope so. Like I said, it's great when we get some new faces in here to help us with the show. So today I'm going to start off the program after our technical news and headlines with life cycle of a DecisionPoint trade. And I'll get more into that later. Obviously, 10 and 10, we've got Abbott Laboratories. ABT will be our first symbol. And then finally, our last segment will be drilling down. So stick around for all of that. And now I'm going to pass it back to you for those technical headlines and news, and I'll get my presentation already.
Sounds good. All right. Well, what's happened here over the past couple of days? Well, you can see that the 10-year Treasury yield, which back on Friday we'd closed about 2.97%, came up, challenged 3% yesterday, and making a big move today, currently up 7 basis points to 3.06%. You think, oh, why is that such a big deal? Well, here's a long-term chart. And take a look. We were in this steady decline that bottomed in 2012. We put in the double bottom here. And when you put in this double bottom, it's really that high between the two that you want to watch, because normally in a downtrending chart, you have lower low, lower high, lower low, lower high, and so forth. But when you come up with these equal highs and then begin to make a breakout, which is what we're doing here above that 3.03% level, which was the high back on December 31st, 2013, if we can close there today, I think this is a very significant change in direction for the 10-year Treasury yield. We've talked about it many times here on the show and with some of our guests. And, it's a different environment because over the past, well, since back in the late 1970s, early 1980s, we've been in a rate reducing kind of an environment where the 10-year Treasury yield, even though we had periods where you can see we had movement to the upside, for the most part, the overall trend was down. And I think this is a significant longer-term break in that trend by getting back through this 3.03% level. So what does that mean? Well, we're going to talk about it a little bit more when we get into drilling down later in the show. But anytime you've got the 10-year Treasury yield rising, that is typically very, very good news for banks. So one of the things we'll talk about during drilling down is the banks and maybe how to find some of those banks going forward. I think that's going to be an interesting area of the market, not just for 2018, but potentially for many years down the road. And I don't expect that the 10-year Treasury yield is just going to go skyrocketing. I think that would be really bad for the equity markets. But I think there will be a subtle movement to the upside based on continuing good economic news or subject to continuing solid economic news. So we'll see how it goes. But anyway, today's action comes on the heels of a few economic reports out this morning. April retail sales matched expectations. They rose 0.3%. Retail sales less autos. So if we strip out the autos, retail sales were up 0.3%. But that actually was a little bit of a miss. The market was looking for a rise of 0.5%. But then May Empire State Manufacturing Survey came in at 20.1. Market only expecting 15.5, so a really big beat there. March business inventories were flat. That came out at 10 o'clock this morning. Market looking for a small rise of 0.2%. And then finally at 10 a.m., May housing market index, 70 versus 69 estimate. So with all of that, let's take a look at what's been going on in the market. First, I want to pull up the major indices. Let's start with the Dow. And, you look at the daily chart on the Dow, and there's still, some issues with overhead resistance. We did just get through that mid-April high, which I think is bullish. We're giving it back up today. We want to watch this 20-day moving average now to the downside. We have gotten the golden cross finally on the Dow, where the 20 crosses back up over the 50. So I would look for some support down there. Now, if you're looking for a culprit for the reason that we saw the selling so far today, I would look no further than the 60-minute charts. We had negative divergences across all of our major indices on the move off of the bottom back from May 3rd. You can see this move up, and as we moved up, we kept printing higher highs on the hourly PPO until yesterday. Yesterday, we had the higher high, the lower PPO, and now it looks like we're working our way back down toward the 50-hour moving average. Now, I'm going to annotate this because I think there's a couple levels to watch here. One obviously is that 50-hour moving average, but I think there's a bottoming head and shoulder formation here. Left side of the neckline, there's the head, right side of the neckline, right shoulder, and breakout. So I think potentially we could maybe move down to this 24,500 level, which is just below that 50-hour moving average. But I would begin to maybe look for some strength there in the short term. Now, if we step back, excuse me. If we step back and look at this daily chart, which I'll get to in 1 second. Yeah, the daily chart here, you can see that this 20-day moving average comes in currently at about 24,450. So 24.5 is that breakout area. 24,450 is the 20-day. So let's give it to 24,450. I think the Dow potentially has 200 more points to the downside, maybe on an intraday basis. I'd be surprised if we go back down much below that. I think this is actually the start of another fairly significant move to the upside. We'll see. The first sign, though, at least on the Dow, would be to watch this rising 20-day moving average. Now we'll pull up the S&P 500, and you'll see very similar. Got that golden cross, and this is the first time this has happened over the past few months. So we definitely want to kind of keep that in mind. All right, let's see here. I wanted to pull up the hourly here as well. I want you to see that this is across the board. This is not just the Dow Jones. As we rose, you can see on the latest high yesterday, higher prices, lower PPO, and back down we go. There's your 50-day here. There's your neckline that we were talking about on the Dow. That comes in at about 2680 or so. So this is going to be an area between about 2680 to 2700 that I'd want to keep an eye on. We can pull up the NASDAQ, and you're going to see something very similar. Higher prices, lower PPO, negative divergence. We've already gotten that 50-period test, and we are trying to hold on there. This doesn't quite set up the same in terms of resistance and support. Here was that prior resistance level coming across. We have come back down and tested that. It's going to be interesting to see whether or not the NASDAQ holds on here and can reverse back later today. It would be bullish if we did that. And then finally, the Russell 2000. Also on this hourly chart, check out the higher prices. So we continued to trade above the 20-hour moving average until this negative divergence printed. Once we had the negative divergence, failed to hold the breakout. Look at us, we went all the way back down essentially to test this 50 and now trying to strengthen again on the Russell 2000. The Russell also had topped out at about 1590 here back on April 18th, pulled back. So once we got through that 1590 level just about a week ago, this moved to the downside. Today's low 1592, getting pretty close to testing that area back to the downside. So I still believe this is setting up like it could just be a quick pullback and another push to the upside. We may know later today, though, if the volatility index continues to rise and we see breaks below some of these levels that I've talked about today, then perhaps we're in for some more of the consolidation that has been gripping the market for the past few months. I wanted to mention the transports because this is an area of the market that obviously is very important. And we did see yesterday move up near 10,800. Check out how important this level has been over the past few months. Each time the transports have gotten up to 10,800, we've gotten up there and we failed. We've turned back around and headed back down toward 10,000 to 10,100. That's about a 700-point trading range. So we really don't want to go back down and lose the moving average. If we truly are breaking back out to the upside, we've got a PPO that's in positive territory again, as we've seen recently. But this time we do have the 20 up above the 50. And on this pullback, if we can hold the rising moving averages, it would be completely different than what we've seen on some of these previous attempts. So watch for that to the downside on the transports. Breakout above 10,800 on a close, I think would be very, very bullish for the stock market. Let's talk about a couple of areas that are certainly worth keeping an eye on. Defense stocks. After the earnings came out in April, many of the stocks in this space sold off and sold off hard. You can see the huge selling that took place. A lot of volume came in. We bounced, but so far failing at that 20-day moving average and rolling back over again. I did post in my blog today, if we move back down and put in a lower low and maybe go back and challenge the 425, 430 area, we could be doing so with lower prices and perhaps a positive divergence. So that is something to keep an eye on. Defense stocks are kind of a one of a kind. I think it was on the seasonality. I want to pull the seasonality up because I think over the last 20 years, there aren't too many groups that show strength throughout the year. Let me see. Defense stocks have one down month on average. This is over the last 15 years, and that's the month of June. Every other month you can see we have positive numbers, and all but August and May average at least going up 1%. Defense stocks, this is an area of the market that you typically want some exposure to. Even in bad markets, defense industry tends to do pretty well. And so this is a group to keep an eye on from that perspective. So when we see the selling, the kind of selling that we've seen here over the past 3 or 4 weeks, that grabs your attention because normally this is a group that doesn't sell off like that. Let's pull up the weekly chart here. If you go back the last few years, you'll see that the selling we've seen here, more than 10%, is really more than anything that we've seen going back the last few years. And we probably stretch it out. There's not a whole lot probably in the whole bull market. But let's check. Yeah, really since 2013, if you look at this, we have not had a 10% pullback. This is the first one. So while you might say, you know, on the daily chart looks kind of weak, when you look at the long term and you look at seasonality, this is probably a decent opportunity on the defense stocks. A couple areas within technology today that were struggling. Internet stocks, and they were getting up close to recent highs. They had moved up into a key gap resistance zone. This is where a lot of the volume, back in mid-March, we saw a lot of volume and selling. We got back up into this gap resistance zone and starting to turn back around. I think we're going to see some really solid support, though, around 1620 if we get there to the downside. That would be price support and the rising 20-day moving average. Keep an eye on that area. Also, semiconductors having a rough day. Yesterday, I didn't like that candle. We had a nice up day, or a nice period of up days, maybe about 6 of them in a row. Then on Friday, we printed this. It's not a shooting star because technically with a shooting star, you should have a gap up to start the day. But the candle was kind of like a shooting star. Then we got one yesterday. And the thing is, the difference between these two candles is that this is a gap up into breakout territory, at least recent breakout. And intraday, it looked like we were making a move through 3,600. We were really on a roll. And then by the end of the day, we're all the way back down at the low. It just kind of gives you that signal of a potential reversal. And sure enough, we are seeing semiconductors getting hit today. But like the internet stocks, I think we're going to see some support when we get down to that rising 20-day moving average. At least from a bullish perspective, that's what we should look for. One stock out with earnings today, Home Depot. For the first time in 7 quarters, they missed their same-store sales estimates. Also, they missed on their top line, $24.95 billion in revenue. Market was looking for $25.2 billion. And bottom line, they beat $2.08 versus $2.06. So far, I think the reaction's been pretty good. We got up prior to the report into this gap resistance zone. You can see back on February 5th, a very heavy volume on Home Depot when it gapped down from about 193, opened at about 189, and then continued to sell off on heavy volume. Since that time, you can see this reaction high back up to about 193, the top of that gap resistance. Yesterday, we got up to about 192, and then we come out with the earnings, and we're moving back down. Really need to get through 193 on Home Depot. I think the action so far, considering they missed on their top line and then they missed their same-store sales, I think the reaction hasn't been that bad, down 1.67% on a day when the market overall is down. You would think maybe Home Depot would really be leading things to the downside. But instead, we're bouncing off the low of 186.10. Volume is heavy. So there's some buyers out there here on Home Depot as well. Watch that rising 20-day moving average on HD. And I think that is basically what I had for the day, or for this session. So I'm going to go ahead and turn it over to Erin for her workshop. Take it away, Erin.
All right. Yeah, let's get this thing started. Let me go ahead and share my screen here and get this ready. Just so y'all know, for today's 10 and 10, since I'm doing this workshop, I'm not sure I'm going to get all of them in the queue before we have to do it. So get them in now, and hopefully I'll be able to get them in when it's time. All right. Okay, so I am Erin Swenlin, of course, of DecisionPoint, and today I wanted to give you an idea of the life cycle of a DecisionPoint trade. I'm asked all the time, what's your trading plan? How do you trade? So I figured probably the best way to do this was just to go through the process that I go through before, during, and after a trade. So I don't actually have like ready for prime time, like checklists or anything like that. But this is something you could probably build from on your own. But let's get started with this. All right, so we know the circle of life. Some get eaten and some are the ones that eat. So we don't want to be the ones that are eaten in the life cycle of our trade. So this is something, of course, to keep in mind as far as our life cycle goes. So let's look at the basics of my life cycles of a DecisionPoint trade. So first of all, you got to get the big picture. And a lot of you listen to me on Market Watchers Live in the mornings, and you know that we go through what's going on in general in the market. And if I'm not feeling great about what's going on in the market, if I'm not really pretty much solidly bullish, I'm generally not going to go looking for a trade. That's just typical. And during this period of volatility that we've been experiencing in the beginning of 2018, I have been mostly on the sidelines, keeping my trades in place that I have and just making sure that my stops are set the proper way and just continuing to reevaluate as I go along. But I actually haven't been going right into this for quite some time because I just haven't felt good enough about the big picture of the market. Once I've got the big picture, now I want to go and drill down, as we say, into what's going on with the different sectors. Because if I'm going to go and do, look for a stock, I don't really want to be, rifling through, for example, consumer staples. Right now, that is currently one of the worst performing sectors. So when I go to look for my stock, I'm probably not going to want to get something from that particular sector, as it's not really performing well when you're looking at it against the S&P. So, and what is our goal is to beat the benchmark, and the typical benchmark, of course, is the S&P 500. So let's pick the best of the best by going into, looking at your sector analysis. Finally, once I've got all of the big picture and I kind of know where I want to be looking and all of that, then it's time to go ahead and do my scanning and, really pull out, pull the wheat from the chaff. And that involves sifting through those results. So I create my scan based on my analysis. And then when I get my scan results, now I have to sift through them. And I'll be talking more about each of these steps. Of course, once I've scanned the results and I found my prize, I will make the pick. And then after that, you have to determine, of course, your target and stop. Now, I'm in the process of running a poll here on Market Watchers Live. For those of you who are watching live, you can take that poll and we'll take a look at that at the end of this. But I'm basically asking you, when do you, or how do you make your trades? Do you usually set a stop or a target when you trade? And, currently just looking at some of the poll results, sometimes seems to be winning, and then always 36% for you. So I think that's excellent, because I think that is the discipline that you need when you're going into a trade, because you have to know what you're looking for, what you want out of it. That way you have a reevaluation points. And there you go. You continue to reevaluate until the trade is complete. Let's go through these a little bit more in detail. All right, so the big picture analysis, you want to actually, in this case, you definitely want to know what the forest is looking like before you go diving into those trees. So that's why you want to look at what's going on in the big picture. You want to be going along with the trends. You want to be going along with what the conditions are of the market. So what I suggest is to review the various areas of the market. And I do this either with the SPY, or just look at the SPX. And then I like to use the ETFs for the mid caps, small caps, and then Russell 2000. And that gives me a feel for what's going on in all of those areas of the market. Are small caps performing better? Does the dollar rising, affect whether we're going to see better performance in large caps versus small caps, that sort of thing. So you want to know all of those different pieces. You want to determine what the overall market trend is. And the way I do that is using the DecisionPoint trend models. They're pretty simple. You can go into Chart School, just look up DecisionPoint trend models, and you'll get how we determine the short, intermediate, and long-term trend model signals. So you can look right in there and look at what the signals are. I'm going to show you a little bit more in detail how you might be able to do that. And then the next, not only do we need to know what the price trend is, but I want to know what the market condition is. So maybe the trends are following in the right direction. You know, we've gotten a bounce, things are starting to take off, but I want to know what the condition of the market is. What is momentum? What are my indicators telling me for each of those time frames? Does the short term look really good, but the intermediate term not so good? Well, that might determine what my time frame is as far as what stock I'm going to get. And then, of course, I look at PMO signals, the price momentum oscillator, the DecisionPoint indicator of choice for determining momentum, very similar to the PPO. I've done presentations on the differences, and I prefer the PMO. Of course, I helped develop it with my father, Carl Swenlin, so makes sense. But I think that is a really great way to also look at the overall condition. And you can compare PMO signals, and you can compare their values across all of these different indexes, across stocks, and that'll give you an idea of internal strength as well as relative strength. So those are the main things I want to do as far as my big picture review. So let me go and take you very quickly into where you can find some of this stuff. And I will tell you that the number one way to get the big picture, there are a couple ways, but number one would be, of course, watching Market Watchers Live every morning from 9 to 9 a.m. to 10:30 if you're on the West Coast, and noon to 1:30 if you're on the East Coast. But we give you that big picture. You don't have to do all of this work up front. You will know based on what Tom and I talk about what the big picture looks like, what sectors are doing well, etc. If you're not able to watch the show live and you can't get to YouTube to watch the replay, then you can come right here to your member dashboard, and there are a few ways you can get a good big picture look. Number one, I would say, are my DP signal tables. This is going to tell you not only the trend, but also the condition based on momentum. So currently, you can see that price trend is looking great for the S&P 500. If I take a peek at the Dow, there's a little bit of concern here with the midterm. We have a neutral signal instead of a buy signal like we've seen on the others. And then you can see the NASDAQ has already picked up that signal, and the OEX, we're still waiting on that. So that can tell you that, okay, the short term's looking pretty good. We've got buy signals here across the board in the short term. So maybe I want to look at my trades for more of a short-term time frame. So I'm taking notes as I go along, right? Okay, that's what my signals look like there. One way you guys can get to see most of my charts and signals, what's going on in the market, is to go to the blogs. Of course, that's where you're going to find the DecisionPoint blog, and this is going to give you the updates you need. I will give you bulletins every time that we see signal changes on that table I just showed you. In fact, I just wrote one yesterday because we got a new one on the S&P, and those two neutrals I just showed you on the scoreboards, those are going to be changing to buy signals today, more than likely. So look for another bulletin later today. The weekly wrap is also your excellent area to find out what's been going on during the week. Carl writes this once a week. I cannot recommend it more highly. It will give you that wrap up. He goes through the SPY, he goes through the sectors, etc. So this is a really great place to get big picture feel for what's going on. The other place, if you really are one who works on their own, you don't really need all the commentary maybe, you can get to the DecisionPoint live chart list. And this will give you all of that same information, only it's already annotated for you. You don't need the comments. You just want to see what's on the chart. and this will give you an idea. I have, and I will show you all of the ones that I do have here, because it's easier to see what's in there if we look at the chart list itself. So let's get in here. So all of these charts are in the DecisionPoint live chart list. I have them organized by the Dow, the NASDAQ, and then you can see I have the S&P 400 and I have the 600 as well as Russell 2000. And each of these do have my annotations on them. I try to keep them up to date. One of the other ways to determine condition of the market is to look at these DecisionPoint indicators, as I noted earlier. And each of these three are the most important charts for that, in my opinion. You can, again, get these from that DecisionPoint live chart list, in which case you're going to find them all beautifully annotated for your review. And, last week, I was writing about the fact that we have very overbought short-term indicators currently. They're starting to turn down from overbought territory. So to me, that could be a problem in the short term. And, we can already see we're getting that pullback today. So short-term and intermediate-term indicators as well. So this gives you a picture of the intermediate term, and it's a different story. We're seeing breakouts above previous declining tops trend lines here on our intermediate term indicators. We have positive crossovers here. Much different. So now we know that in the intermediate term, things might be looking a little brighter than in the short term. So if I'm okay with making those intermediate term trades, maybe waiting for that pullback in the short term, I mean, that's giving me that information as well, then again, you're writing your notes as you go along. What are the conditions? And then based on your own risk aversion or tolerance or your trading time frame from what you've learned, I mean, that's when you would start to go forward and look at those notes and now determine where you're going to go next. So let's get back here. The next thing, as I said, is sector analysis. Everybody's seen, well, most people have seen this chart that I put in. We also have a really great chart in Chart School if you look up sector analysis or sector rotation. This is why I find sector rotation important. We're not only looking at which sectors are strong, but a lot of times before we trade, if we have an idea of which sectors are doing well within the business cycle, or within the cycle of the market, the expansion, contraction, all of that, we want to pay attention to which ones are stronger, because that tells me what's going on as far as the big picture again for the market. Are we looking at discretionary doing well? That means we're in expansion phase. If we're looking at healthcare and consumer staples leading, now we're looking at a contraction. That could mean bearish outcomes as far as the market in general. So how do I do my sector analysis? We have that DecisionPoint sector signal table. And that one, as I showed you earlier, you can get to from our blog articles. Just go to the DecisionPoint blog, and you will find every DP Weekly Wrap. Carl will include the signal table at the top. This tells you what the intermediate term trend model signals are, the long-term trend model signals, and it also lists the cap weighting as far as the S&P 500 goes. And so you can look at, okay, 50% are bullish. Which ones are bullish right now? Okay, discretionary, technology. That means that's good for the market. That's what we'd like to see. When we're looking in the long term, that could give you a real feel for where we have been and where we might be going. You've got consumer staples are on a sell, utilities, real estate, and these are areas that you wouldn't expect to do all that great, during a good bull market. So that pretty much tells us where we've been and where to watch. So that's one way to get your sector analysis in. The other way is going straight to the home page. And over here, you'll find our charting tools as well as our reports, and recommend you go to the sector summary. And again, what time frame am I looking at? 3 months, 6 months. Let's see what sectors are doing what. And you can see as far as percent change, energy is doing quite well, cyclicals, technology. So these might be areas I want to concentrate on. The lower scooter here might mean something interesting is going on in industrials. It's not quite as low as staples and utilities. Might be an area to look at. But mainly, I just want to know that before I get in, these are the areas that are going to be stronger. So I might want to set up my scan to look maybe only in these areas because I know there's already some internal strength. Or maybe I want to look into financials, possibly industrials, to see if there's some momentum changers in there that we might be seeing doing better. All right, the weekly wrap, as I showed you earlier, also a good place. That's where you get your sector table. And then also when I do the DP alerts, and you can find these pretty easily. Again, you go to your blogs, go to that DecisionPoint blog, and then anything you see DP Weekly Wrap, or if you see a DP alert in the title or you see this, that's going to include the sector signal table. It's going to include the scoreboards. So again, you can see what's been going on and what is currently going on in the market sectors. And I showed you the sector summary. You can also go in and do the same if you want to really drill down. You can go into the industry groups for some of these sectors. And that is easy enough to get to again. Homepage. And under the sector summary, there's also the industry summary. That's one way to do it. Also, if you want to go to the sector summary and you're thinking, well, energy is looking good. If I click on it, that brings up all the industry groups within there. And I can look at, which ones have been doing better than the others by moving the percent change. So maybe oil and equipment and services is somewhere I'd like to go. Click it, and this gives me some to look at. And I can just do this straight from that industry summary and through the sector summary. All right, so now it's time to scan. And we want to certainly scan for what is looking best based on all of our analysis. So we want to use parameters based on that. And, if you want to do a more generalized scan, you can do that. But maybe you want to, as I said, you're looking at a certain industry group. You see some real power going in behind that. And so you want to add that into your scan so that you can, narrow it down. And this is what you can do with it, right? Strong sectors, strong industries, maybe strong indexes. So, you're thinking, again, rising dollar, small caps might do better. So maybe you want to concentrate on that, or based on your trends, et cetera, that's what you want to do. Well, of course, once you get the scans complete, honestly, the hard part is sifting them, I think, and finding those gold nuggets in that group. Now, depending on, whether you're scanning in a big bull market or you're seeing pullbacks over the past week or two, you may not have as many to choose from. And honestly, I take that as a signal. If I'm only getting about, 6, maybe 10 results from a scan that I normally see 30 to 40 results in, that tells me something. That tells me that maybe this isn't the best time to go in there and make a trade. So how do I sift my scans? First of all, I'm going to show you where you can find some of my scans, because I know that question is already rising in everybody's minds as I'm going along. So there's a few ways to get to it. I'm going to show you one way is you can just type in the search box, PMO scan, and then put my name in here. My old one, no, we don't want that one. Here we go. And blogs. And so now you're going to see a lot of what I've done, but you can usually find my scans, or at least a discussion about my scans in here. So that's one way to do it. The other is very easy from the blogs page. Go to the Market Watchers Live blog. Of course, that's where you find the chart list. And if you go every single article, if you go all the way down to the bottom, you are going to find important or helpful Market Watchers Live scans. So you'll find all of these, but that's where you can very easily get to my generalized PMO scan. And this is generalized. You can adjust it, focus in on different universes, but this gives you an idea of what I look for. This is, of course, the comment line, and then this is the actual scan language, and you can just grab it, copy and paste it into your scanning workbench. And that gives you a great place to start. I don't think this is necessarily, even though I say it is the scan to rule them all, it's not the be-all, end-all scan. Really, it's much better once you tighten up the parameters on it. But I think this is a great place to start. But you take that scan, right, and you end up with 30 results. So what do? Well, you want to save it to a chart list. The next thing is to view it all in your candle glance. And then what I say is delete freely. If there's anything that doesn't look great on one of those scan result charts, we'll get rid of it. I'm sure there's something better in there. And if there isn't something better, then maybe we should wait. Maybe it's not the best day for a trade. You want to look for the best PMO configurations. Of course, that would be momentum changes either in oversold territory or just above the zero line. That tells you that there's internal strength. Read some of my blogs and I'll talk more about that. I actually did a Sifting Scans workshop in one of our Market Watchers live shows, so you might be able to find that on YouTube with a quick search. Look for common chart patterns. I've done a chart pattern workshop. Go in and look for the bullish patterns. If you're looking for shorts, go in and look for the bearish patterns. Combine that with a really good PMO configuration and just a good lineup where you can see that support and resistance. All that is good. You can create the best candle glance by including the PMO or including any indicators that you want. If you save your candle glance chart style as candle glance, then you'll get to move that and make it look the way you want. So I'm going to go ahead and we're going to run a scan very quickly so I can show you just briefly how I sift through my scans. I'm going to take a focused PMO scan. And I mean focused by the fact that I'm looking at one particular group or another. So I'm going to just leave this into the 600 and let's see what kind of results we get. All right, 7. So see, this is telling you something. I know we're starting to see a shift here off of this third bounce off support, but I'm only getting 7 results. So again, that could be telling you something. Go ahead and merge these or replace an existing chart list. I have what I call my scan dump. I put stuff in there that's transitional. I'm not going to be going back to this particular list to do anything. I'm using it as my scan sifting. So now I want to look at it in candle glance, like I was saying. And this does look very different from the one that is the default. And like I said, the best way to do that is go into your workbench, set it up the way you want all these to look, and then save it as the chart style as candle glance. So what am I looking for? As I said, I'm looking for good chart patterns. I'm looking for PMOs that are turning up in oversold territory or just above the zero line, looking for good chart patterns. So, I'm going to just look through this briefly. I'm going to say, okay, I don't like the way this has been basing right now. Doesn't look, that's not what I'm really interested in. So I can just delete it. Let's get it out of there. I see a closed gap here on an island. I'm going to get rid of that one. I don't like the setup there. So simply going through, and it's a little easier when you only have 7. At this point, I'm thinking when I'm looking at these and again, this is cold. I like this one right now to look at because I have a flag formation and I have a PMO that's turning up above the zero line. It's continued to test the zero line and move up. That tells you that you've got some internal strength there. Things are looking pretty good. Like I said, got the flag formation, so that might be an interesting one. I'm seeing a decent OBV. So this could very well be, what I'm looking at. So let's go back to what we do after we've sifted our scans. Now we have to determine a stop and a target. So once you've made your pick, you got to set that stop and target. And I highly recommend this. I think you need to be disciplined in your trading enough to know when you get into something what you want it to do, and where is that point where you're just like, man, I wish I'd never bought this. I need to get out now. And that should be your stop point, or a little bit higher, again, depending on your risk tolerance or aversion. So what I recommend is trading time frame. If you're trading in the short term, you can use those 60-minute charts, use those daily charts. If you're going to trade in the intermediate term, maybe you want to use a weekly chart instead of a daily chart to determine your stops and targets, because they might not be nearly as tight as when you're doing a short-term trade. Find those important support and resistance areas. How do you do that? I'll show you shortly, but it's really, you can tell, and I think most of you have been doing this long enough that you can recognize intermediate term support, longer term support, that sort of thing, where your resistance areas are, what's that reward to risk based on those. So again, you want to set that stop based on that risk tolerance, what you want out of it. If you're setting a stop, if you're looking at trading range and the stop is well below your resistance, your support is, so you've got a much longer place to go to hit the stop and a much shorter distance before you hit the target. Okay, I don't prefer that kind of a trade. I want to have the least amount to go down and the best target ever that's much higher than where my support is and where price currently is. So you want to set it based on those levels. Set your target based on the resistance levels. What is your goal? What would make you, if you made this much money, if you hit this percentage, would you go, wave your flag and, want to tell your friends about how well you did? Where is that target? Where do you want to get to? And again, this is important, set that goal. So let's go back here real quickly and we'll look at the one I just picked. Like I said, this is, I'm doing this cold right off the cuff, but I'll show you a place where you can get more interesting information. So I'm going to go ahead and annotate this for possible support and resistance areas. All right. This right here looks like it could be a good support level, right? We've got a lot of tops hitting here. You can see that we had, when we did break down, that seemed to be the area of resistance. And look at that, it's set up actually quite nice because price is already right around that. So I think so you could set your stop lower than that. And I would go, okay, well, where is the next level? Well, I could see this trading range here. But maybe I'd want to be a little tighter about my stop, maybe bring it up a bit higher. But these are ways you can determine where that stop should be set. I don't think there's any set rules on this, except the ones you make for yourself. And then there's my target. Obviously, that's the upper, the top of where we've seen price going. So if I were to look at this, okay, maybe I set the stop right in that 44 to 46 range, depending on whether I'm looking at a super short-term trade or not. I think probably looking at this straight out, I'd probably be looking about 45 would be my tolerance as far as a stop on a short-term trade. Kind of splitting the difference here. I feel like that, again, it makes sense for me. And it's splitting the difference of this trading range here. It's not quite so far as the bottom. It's just a little bit higher. And again, that's just my own risk tolerance. My target, well, of course, I'm hoping it's going to get up here to previous highs. That would be what my target would be, about 49 or 50. So write it down, set my price alerts. You can do that, of course, from the member dashboard. So I want to set my alerts to tell me, okay, let's go here. So a new alert. All right, I was looking at, well, I've already moved it, but we'll say we were looking at, Ford, and we want it to be, below a certain percentage or above. I'm basically going to set it up so that my stop is in here. So I would change this to a price probably, or move it a 5% up. I'll look at about what I expect to see here. But then set your alert so it reminds you that, something has happened. All right, we're getting a little bit low on time here, but I have some more to let you know about. So once your stop is reached, it's time for that reevaluation. And one rule, in my opinion, is get out, don't convince yourself to stay. Hey, I set that stop for a reason. That's all I need to know. So there you go. Once the target's reached, though, now it's time to you got to reevaluate. Does this stock, after reaching that target, does it have a strong outlook? Does it look good? Okay. All I really need to do at that point then is adjust my target and my stop. If it's still looking strong, I don't need to move my position back. But if I have a weak outlook, it's not enough to say, I don't need to get completely out. So maybe I'll pull back my position size if it's just not looking as strong as it did before. Maybe I tighten that stop to preserve a lot of what I've gotten. So if it doesn't have a good outlook, then just go. I mean, take your profits and pat yourself on the back. So basically, reevaluate, repeat until the trade is complete. So rinse and repeat. Just keep going until you end up out. And that's really the life cycle of a decision point trade. You want to be selective. These are your takeaways. Great trades are going to happen. Don't force it. I always say that. Don't force it. Again, there's always a good setup. You don't have to get in today. I know you want to, but you don't have to. Trust your analysis and listen to it. If you set that stop, then get out when you hit the stop. It's important to set those, mental or otherwise, just so you have some attention flag to help you reevaluate. Take the profits when possible and get out when needed. I mean, I think these are pretty simple, but it really just is the discipline that's required behind it. And that's all I have for you today as far as the life cycle of a decision point trade. So I hope you enjoyed that and you got something out of it. Let's go ahead and take a really quick peek at that poll. I know we're getting into the 10 and 10, but if we have that, I'd love to show that. All right, so hopefully I've convinced some of you to move from that sometimes and rarely and certainly never into the always category. What does it hurt you? It just makes you have some discipline about your trades. What is bad about it? Maybe you want to set it mental. Maybe you want to have hard stops. I generally set my hard stops if I'm leaving and I'm not going to have a chance to look at things and I can't really follow up on a price alert. I might want to tighten my stop or make sure it's a hard stop in my account. Otherwise, maybe it's mental and I don't need to do that, but I want to still get that price alert so that I can go in and reevaluate. That's pretty much the completion. I hope you enjoyed that. I will take a look at questions that arose during my presentation, and I'll try and get to them in a future blog or simply just answer them maybe by the end of the show. And I did want to point out one other place you can go and get information. I did write an article back here, if I can find, here we go. I did on January 18th, 2018, and it basically went through some of what I just did so that you can see where you would set stops, why I set stops. And I took this through real time. So, we set it and then we went to the next place and saw what happened, etc. So again, January 2018 in the Decision Point blog, Anatomy of a Trade, Kelly Services, and that'll help you as well. And I think it's time for the 10 and 10.
Sounds good. I do want to mention that in that poll, I'm in the always camp.
Me too, if you couldn't tell.
Even for your longer term?
Yes, even for longer term. I still want to set those because I want to revisit. I tend to revisit anyway. I mean, don't we always? But I need to have somewhere to set an alert, a price alert to tell me, just in case if I haven't looked lately, you better go look. So I find it useful for just that reevaluation, if for nothing else.
All right, you want me to go ahead and start with the first 10 and 10?
Yep, go ahead. We'll do Abbott Laboratories, and I'll start compiling the ones that we have in here that I didn't get to write in, and start voting, guys. The most popular will be the next symbol on the list.
Okay, well, Abbott Labs, we had a beautiful move up back in January. Of course, that's when the market topped, but this move did carry with it a lot of volume. Went back up with some decent volume, put in a double top, And notice that that low between the double top continues to hold as support. So I think right now Abbott is just consolidating. I think eventually we make the breakout. I do believe this came off of an uptrend, and the sideways consolidation should be viewed as a bullish pattern with the expectation that we will see a breakout to the upside. A confirmed close over, say, $64 with some increasing volume is what I would look for. But I do like the fact that on this last move up, we've got a nice looking PPO. On the pullback, we should see support at about $60. You can see both of these moving averages coming in at that level as well. If we go back through these two moving averages, I think it's more of a sign of just further consolidation. But if we truly are beginning to trend higher again, we should see this $59.50 to $60 area hold as support.
Okay, let's see. The next one, the most popular currently in the chat room right now, is Twitter.
All right, we haven't taken a look at this. I think Twitter, it's just continuing to consolidate as well. You've got the gap back from February as support, and you've got the high in March as resistance. So I think for now, you are simply just trading in a fairly wide range between about 27 and 36.5. And we're in the middle of that. Now, again, if we're trending higher, I would expect for these moving averages to begin to act more as support rather than just being a couple lines on the chart that you keep going up above and below. So to the downside, if this is truly the beginning of the uptrend here, we should look for some support at that rising 20-day moving average. We do have a golden cross here on Twitter where the 20 has now risen back up above the 50. So that's a good first step. But I'd like to see that hold on a pullback. So let's use about 31.5, maybe even 31.25 as an area of support to the downside, looking for that target up around 36.5.
All right, let's see here. Let's do Snap. I think, hang on, let me just double check that if we have, well, we did that a couple days ago. Let's do SEA.
All right, SEA, which is Power Shares Shipping.
Mm-hmm.
Okay, well, I know a lot of these shippers I struggle with to get them right, but the ETF, I guess, maybe will at least give you a little bit more or a little less risk. You can see that over the past several months, this has traded between a range of about 1030 and 1230. And mostly here in the last 2 months, really between 1030 and 1150. So not a whole lot of volatility. But so far, the action to the downside has been, we've seen rescue attempts at that 20-day moving average. So let me just annotate that onto the chart here. You can see we gapped just below the 20, came right back up. Also there, here we got close. And even the first day when we got above that 20-day moving average, we did hold. Now, this all got started by a positive divergence. And we haven't seen a whole lot of these because the market, for the most part, for the last many years has been pretty bullish. But you can see that we did move down to new lows, and at that time had higher PPO readings. So anytime you get lower price action with a higher PPO, it's just a sign of slowing selling momentum to the downside, which is normally a bullish signal. So what we look for initially is a trip back to the 50-day moving average and the PPO to reset at the center line. In this case, though, instead of turning back lower, we continued moving higher, and you can see the volume come in on this push back up through the 50. So I think that was the initial sign that the downtrend had ended and we were beginning to uptrend. And you can see that these green arrows are confirming that, at least to this point. I would be watching to the downside. I think you should have some pretty good support just above 1110. And you've also got that rising 20-day moving average currently at 1114. So a pullback down to that area I'm fine with. But if it goes much below, say 1110, I would become a little bit more concerned, especially if it's on a closing basis.
Okay, let's see. The next one is in the healthcare medical equipment, Tandem Diabetes, TNDM.
Yeah, first of all, it's a great space. I think this is a smaller company, small cap, and these small cap healthcare stocks have been really in focus for the past several months. And I think TNDM clearly has been one of the top performers. The stock back in February was under $2.50. It's now over $11. And look at the volume coming in. This is not just some meandering back and forth. I mean, it seems to be a lot of accumulation taking place. The stock has been overbought now for about 7 weeks. Really could use a pullback, maybe back down to that rising 20-day moving average. So it's hard to say what to do with the stock currently. I think if you got a reversing candle, you'd have to be careful because you do have a lower PPO. So reversing candle on heavy volume would maybe signal a little bit more short-term weakness. But it's been a great stock and hard to bet against it. I just wouldn't chase it. So with the stock, problem is that with it at 1150 and the 20-day moving average at 850, a $3 pullback would still leave the stock in a fairly bullish position. And that would be down 27% from where it is right now, something like that. So I would be, I would certainly be cautious in terms of entering the stock. For me, probably the best entry would be that rising 20-day moving average. So let's see if we can get a pullback. You also, by the way, have gap support between 9 and about 950.
Okay. Let's see. The next one we're going to do is Under Armour, UAA.
It's gotten a lot better recently, and I like the action today. We've got some pretty decent volume today. Already 4 million shares and just a little past the halfway point of the day. So it looks like it's going to be, one of the heavier volume days, and it's trying to make this breakout here above the 18.5, 1875 area. So the first thing I would note is that we are getting a breakout above this level right here. If we leave a long tail, come back down, close near the low of the day, I'm going to expect maybe a move back to test that 20-day. But this is a stock that definitely has improved. Look at the volume coming in back in February. It was holding the gap support and that rising 50-day moving average, and now continues to trend higher. So I think Under Armour is being accumulated. I like the stock to go higher, but from a daily perspective, let's see how it closes today. If it can close near the high, I think it's probably got a little bit more left in it to the upside because of the volume. If we finish well off the highs, then I think maybe a 20-day test might be in order.
All right. Let's see. The only industrial requested was Masco Corp, MAS.
Yeah, many of the industrials, the big industrials, have been hit really hard. I'll come back to MAS, but if you just look at the XLI, this has been one of the weakest areas of the market. And a lot of these stocks are the multinationals, the big companies. I think they're being impacted quite a bit by that rising dollar. And so I think that's going to be a headwind that they face going forward. Notice that the last test, let me annotate, show you this. The last test that Masco had of gap resistance and its 20-day moving average did not work out very well. So right here, you can see that tail comes up, hits the 20, actually went above the 20 intraday and came right across to test the bottom of gap resistance right there. And we have not been able to close back above that since gapping down. Look at the volume that came in back in April on the huge selling. We keep going back up and testing this area. I think in the short term, MAS is kind of buried in this trading range between about 36 to the downside and 38.5 to the upside.
Okay, let's see. Next one is, and I certainly love this company, Estee Lauder. I'm a Lauder girl, as they say.
Yeah, I think it was earnings where we saw the big sell-off, and the stock's coming back. I think it's in a decent space, and that's helping. But technically, it is into what I would consider a gap resistance zone, and I certainly wouldn't be a buyer here. I'd have to see it get through. But what I'm talking about is right here. So you've got the top of gap resistance at 144 and change, the bottom of gap resistance right around 140. Notice after this rally, as we're coming back up, we're hitting the 20-day moving average, which many times is where we see failure, and we're also into this gap resistance zone. So my guess is that we're going to turn back lower on Estee Lauder and maybe consolidate for a bit, and then maybe we'll have a shot to push through. I'd be surprised if we just go right through. And the other thing I think I would take a look at here too is if you connect these highs, and I know this is a very short-term thing to look at, but notice that if you connect these high candle bodies, that we've got a trend line that also comes right into this area. So there's a lot of reasons for sellers to be in this area, and so I'd be surprised if we just go right back through.
All right, the next one is, let's see, it's our only financial sector request, and that's PayPal. PYPL.
Yeah, kind of in there with Square and some of the others. Consolidation continues. I expect that the breakout, that we'll see a breakout as opposed to a breakdown. I'm going to lengthen this out to a year. I think you can see a much better pattern on PayPal with a year. So we had the huge move higher, and now we've just been in this consolidation mode. I think the big low is 70. If PayPal were to go back and close below 70 or 69.5 right in here, that would be a problem. But I think until that happens, I would be treating this strictly as consolidation. Following a bull market run to the upside, here's your uptrend, and then this is your sideways consolidation. I would look for a breakout to the upside. I think we're going to go back up and challenge that 85, 86 area. But currently we are in this probably about a $15, $16 range, and we're right in the middle of it. So it's just a difficult stock to trade here, but I do like it longer term. I think we're going to go higher.
Okay. The next one, of course, for our Canadian friends, I do like to throw one in there when I can. NTR.TO. This is in the chemicals industry.
Yeah, nice move up. That kind of threw everything for a loop there. That moved to the downside in January and February, especially February. You know, we've got the PPO rising. I would say I'd play this as an uptrending stock, even though we have been going sideways for the last several months because of the big volume that's come in recently. So let's first just highlight the rising 20-day moving average, because if you're trending higher, you definitely want to see that hold to the downside. And you can see back in February and March, we went up, we came back down, we did not hold that 20-day moving average, and you've got to be careful. When you don't hold it, then it's not trending higher. That normally means you're continuing to consolidate. And here we went below it, and you can see that this longer term consolidation simply continued. So now you've gotten this breakout above this double top at about 61. The volume has picked up, and you've got 61 support, price support, along with that rising 20-day moving average that I would be looking for to hold to the downside. So currently I would trade this as a stock in a range from 61 to 69 with a buy down closer to 61.
All righty, we'll let you get that coffin in there. I know Tom's feeling a little under the weather, so you'd never know because he's always so energetic. All right, our final one is going to be an ETF as well. The transportation iShares, IYT.
All right, 1 second here. Yeah, I think this is going to look a lot, excuse me, like the transports. When I pulled that up earlier, yeah, you can see this 195 resistance area. Let me annotate these lines that I would watch. But I'm going to say 180 to 195 is your trading range. You really want to get a breakout. I would not be buying it here. If you're trading this as a beginning of an uptrend, maybe consider buying it on a 20-day test. Otherwise, I'd be looking for a breakout above 195.
All right, let's see. Yeah, we'll give your voice a break there. Very good. That was the 10 and 10. Made it through there, and the symbols should be appearing. There we go. I will get these up in the Market Watchers live chart list, and you will find that from the blogs page. Just go to the Market Watchers live blog, and you can get the link right there at the top to get to our live chart list, and all of the 10 and 10 for the past 3 days are listed in there with all those annotations. So recommend you go check that out. And with that, I'm going to give you a very quick outlook on ChartCon. Very excited. Stockcharts.com/ChartCon is how you get there to find out more. I won't go into great detail, but the main thing I want you to know is that it is August 10th and 12th. 11th, I'm sorry, 10th and 11th, and it will be streaming live. So you do not have to go in person. You simply register. You will then have access to all of the live events and discussions. And then after the program, you will also have access to that to watch at your leisure. You can also rewind and fast forward through those presentations in live version or in those archived versions. So check it out. Register now. Price right now is $250. So you'll want to go ahead and do that. And let's face it, you will more than likely make that up in one or two trades that you follow the advice of just anybody who's giving those discussions. The speakers are outstanding. So let's go into our final market update, and then we'll get into our drilling down segment. I'm just going to take us over here to the candle glance, and it brings up all of those charts that you want to know and want to see. I'm going to adjust it here a little bit. We'll put the TSX in there, and I am going to add, let's see, let's add XLF since we've been talking about financials. And there we go. So these are 2-day, 10-minute charts, I believe, 10-minute bars. And what I wanted to point out, of course, is definitely we're pulling back today. We got a big gap down, but it seems like we've hit those intraday lows, at least for the Dow and the S&P, and we're consolidating sideways. So hopefully we won't go back too far to test those intraday lows, but it looks like we might be okay. Seeing a rising bottoms trend line already on the NASDAQ as it continues to consolidate sideways. Russell 2000 really suffered yesterday a lot faster than the other indexes. And today it's coming back. It started lower as well, but it's just down slightly at this point. So making a much better recovery than we're seeing in the S&P and the Dow. TSX, Canadian markets, we're seeing mostly unchanged, looking somewhat familiar to the Russell 2000, but we really didn't open quite as low for the TSX. And after a big rainbow move here, we're now sitting on top of yesterday's close. We've got the TNX Treasury yields, as Tom mentioned earlier, moving up to now over 3%, 3.078%. UUP, we've got a big gap up, starting to pull back from there, but still holding on to most of those gains that were garnered at the beginning of the session. Commodities are up slightly. Oil, though, however, is down. It's made that attempt to get up and hit positive territory for moments, but it is back down. Seeing a rising bottoms trend line, though, so we might be seeing some improvement for USO going forward. Gold, big gap down and is now consolidating mostly sideways, trending a little bit lower. Currently GLD reading at 122.35. The VIX is rising. We are seeing readings above 14 right now, 14.37. I don't think this is, you can tell that people are feeling a little less, they're a bit more concerned about the market. But ultimately, when I get readings between, 10 and say 20, I don't get too overly worried about the VIX, but we do notice that it is moving higher at this point. Financials are mostly unchanged. Certainly been a rocky day for XLF, trading as high as 28.35, but then falling as low as 28.15. So difficult day, but we're ending right now so far in neutral territory. And with that, I'm going to complete our final market update. And did you want to add anything, Tom, or shall I go ahead and get into my drilling down, or would you like to do yours?
Now go ahead. Go into the drilling down. I didn't have anything really to add. Just the dollar making that big move again. That obviously has an impact down the road. I think with the small caps, and I think that's why they're outperforming again today.
Absolutely, and we were looking for a pause, and we got it. So I think that is very good for the dollar. We are getting ready to hit some overhead resistance here, though, at about 24.75. So we'll have to be watching that. But I think with this move, seeing the power behind it, we had the pause after this big rally. I think it's reset. It's ready to move higher. So I think the dollar's looking good. Could be a problem for gold, though, later. So I'm going to go ahead and go to our member dashboard, and we'll get started with some drilling down. And I think, Tom, you were the one who came up with this segment, but the idea is that we look at, again, it was sort of like I did for my presentation, look at big picture and then start drilling down to find your stocks of interest. And so I thought today I would start just from that Pro Control Center. I mentioned it earlier in my report and my presentation about using the sector summary to find possible candidates, or at least understanding maybe a place to scan to get some of those opportunities that you might want. So first of all, I'm going to go ahead and we'll look at the S&P sectors. I'm going to look at them in a somewhat short-term view. I'm going to go in the 1 month view to see how they're doing currently and where the strength is and where the strength may not be. So right now I'm looking in here, and obviously energy is just having a terrific month so far. We did have a poll, I think, the other day about whether energy would be the highest performing sector for May, and I suspect it will be. It's off to a great start. But maybe I don't want to go quite into just the strongest. Maybe I'm looking for something that's turning around. And we know that I know that the NASDAQ 100 last week had an intermediate term trend model buy signal. So I could concentrate there. But, you know, I think I told my producer earlier I was going to do energy. So I think I will go into that energy sector. It's a strong sector, but maybe there are some interesting stocks in there that are, you know, moving their scooters from maybe a mid-range into a higher range. So let's go take a look. And you can do this very easily. I like this opportunity to drill down. I just went to that sector summary, and now I clicked on energy. It brings up all of the different industry groups. And so it's easy to get to the stocks within those industries simply by clicking on the sector from the sector summary. Now I've got all of the industries. And I think I'm going to go into exploration and production, but let's see which ones are having the best changes. Okay, so we can see coal's having the big move. It's up 38% over the final month. Okay, that's run. That seems to me it's run most of its course. We have exploration, production, pipelines. So looking at these percent changes, you know, they're all doing pretty well, but I think I'm going to concentrate here because it is the highest performer other than coal, which is obviously taken off. So I'm not going to try and chase. But I want to get into something that is a bit stronger. So this is one way to do it. I click that sector, and this gives me the exploration and production stocks within that industry group. And there are a couple of ways, of course, to go through this. It's a lot of information. I would recommend looking at the scooter as one of the places to go. And that's what I'm going to look at first. And let's see, we can do our columns here. And yeah, I think we'll keep it the way it is with the scooter sitting up front here. And like I said, I may not want something that's already up really high here. I might be wanting to look for something that is making a move or looks like it's improving. So maybe I'll go into a mid-range here. And here's one, let's see, Western Gas Partners, WES. All right, so this one's pretty much made its run, and we can see overhead resistance is sitting right there. So obviously this would be a pass for me because it's already made its run. So let's go ahead and go back and look at what else we have a choice of. Let's try Oasis Petroleum. Again, another one that's made its run, but you can see the momentum, although it started to turn over, starting to turn back up. This one might be worth a weekly chart just to see, because it does look like it's kind of pausing a little bit here, maybe consolidating. And that's why we started to see this arc on the PMO. But maybe I think I should look at it a weekly version just to get a better feel for it. So there we go. We've hit that overhead resistance. And I'm going to annotate this because I think it's an interesting chart. And then I'll pass it back. So you can see right here, when I look at the weekly chart, that area there, that October high, we have cleared it. And that also, notice, matches up with a low we saw back here in 2014. It was a resistance level and then a support level back in 2015. It was an area of overhead resistance back here in 2016. I think that's a very important area of overhead resistance. It's now been moved through. And what's the upside potential here? All the way up to 1750. And that brings you into this range that we've seen previously. as a trading range. So I think this could be a really interesting play. You can see that the 17-week EMA is already above that 43. We got the PMO on a new buy signal and moving higher. So that's a way you could drill down and maybe look for some opportunities. And so Oasis Petroleum, I think I looked at, and WES. And I'm going to pass it back to you, Tom. You have a few for us?
I do. Let me go ahead and pull this up. Okay, I looked at it from a different perspective. And again, I'm taking a view from the big picture, and I see the 10-year Treasury yield breaking out. The first thing I wanted to do is just show you a chart of the banks relative to the S&P 500. So this tells us how the banks have been doing relative to the S&P. And if you notice when the 10-year Treasury yield bottomed here back in the middle of 2016, notice that we also put in a bottom on this relative ratio between the banks and the S&P 500. Since the 10-year Treasury yield began rising, banks have been outperforming the S&P 500. So I think if you're in the camp that I am that believes Treasury yields are going to continue moving higher, I think banks have to be a good portion, have to be a good part of your portfolio or your investment strategy. So I'm going to take a look at the banks today. Now, I wanted to just point out this correlation down here at the bottom, because the banks, what I'm looking at is the relationship of this ratio line, banks versus the S&P, to the direction of the 10-year Treasury yield. And you can see over the last 5 years on this weekly chart that we stay almost always in positive territory, many times near 1, meaning that when the yields are going in one direction, banks are typically going to outperform the S&P. If the yields are going up, banks are going to outperform. If the yields are going down, banks are going to underperform. Well, if we think that the yields are going to continue to go higher, then I think we would kind of look at this chart and say banks are certainly an area that we want to consider while we're investing. Now, I'm pointing it out now because look at where the correlation currently stands. And we pointed this out, I know, in a lot of the discussions I had with interest rates here in the U.S. versus Germany, how they kept going higher and the dollar was kind of going in the wrong direction. The dollar normally follows it, but we had moved into had a negative kind of a correlation or an inverse correlation. I think banks are kind of doing the same thing right now, that we've got the 10-year Treasury yield clearly breaking to new highs. The banks relative to the S&P have not yet really broken out, maybe just barely at the beginning of the year. But you can see we're still hovering, even though the 10-year Treasury yield continues to rise. And so what that has basically resulted in is this correlation factor between the two moving back down to 0, which is unusual to say the least. And over the last 5 years, we've only seen a few of these readings where the correlation turns, I'm not going to say negative, but kind of flattens, moves back to 0, which is telling us there's not a lot of correlation. And yet I know from my background as a CPA, there should be a lot of positive correlation because bank earnings tend to go higher with rising Treasury yields. So I think this is presenting an opportunity. And if you look back, when the Treasury yield was dropping here, you can see that banks were kind of holding their own versus the S&P. And as a result, we went down near 0, and then the banks dropped pretty quickly versus the S&P 500 to play catch up. And then we got back to up close to 1 as they kind of started to track with the 10-year Treasury yield again. Same thing kind of happened back in March. You can see that the 10-year Treasury yield was going down. And look at the banks relative to the S&P trying to make a breakout. And so the yield kept moving lower, and eventually the banks played catch up. And when they did, then we started having positive correlation again. I think we're looking at a similar thing right here. I think the Treasury yields are going up. Banks are starting to turn higher, but have not yet even broken out. And I think we're going to see a strong surge in the relative performance of banks to turn this back to the upside. Now, I ran a scan and just looked at banks that have scooter ranks above 70. And this was the list that came back to me. So you can come back and take a look at this. We only have a couple minutes, so I just wanted to point out maybe one in particular I thought was really interesting was Cullen/Frost Bankers, CFR. Now, this is a $7.6 billion bank. It's based in San Antonio, and it does a lot of energy loans in Texas. And, of course, energy has been picking up, and energy is doing much better. So I have a feeling that this is a bank or a bank that's kind of ahead of the curve, and that's exactly what the chart's telling me. We're seeing CFR break out, even though the banks have not. Let me pull up just the chart of the banks real quick. And you can see the banks still languishing way below these January highs. But if we take a look at Cullen/Frost again, that's where we were at the January highs, and we're up more than 10% from those January highs. So you've got a great relative performer here in CFR, and one look at the relative chart would point that out. Here's the bank index. Oh, wait a minute. Let's try this again. All right, so here you've got CFR breaking out. Here's the bank index, kind of languishing a bit. And look at the relative strength. And notice that this relative strength in CFR started back when the 10-year Treasury yield began making a pretty big move to the upside. So I think that CFR is one of the better performers. And on a pullback, I think this would be a great looking opportunity. But I really do like all the banks. I think the banks are going to run higher, and it's just a matter of trying to find an individual bank here or there that really fits your parameters. So why don't we go ahead and get a quick summary of what we just looked at, Erin. I know you looked at, kind of going in from a different angle on the energy stocks. And I kind of finished with a stock that I think could do really well based on both the idea that energy is starting to do better, and that banks should do better with higher Treasury yields going down. So here's kind of how we looked at it. You can take a look at that as a quick summary.
Yep. And exactly. That's one of those ways to sift through, as I was talking about. And I think it's important to, know what's going on in the sectors, and then, drill down in there, look at the different ways you can get to the best stock picks.
Yeah, and I think too that having a theme gives you a little bit more confidence on placing the trades. I think you still keep your stops in play. You still you want to have targets like we talked about earlier. But I think that does make a big difference in your trading by being able to follow some of the big picture themes that we talk about from time to time.
Exactly. And I have to say, a lot of people's questions were, asset allocation, how much to risk on a trade, et cetera. And, that's not my specialty. I can recommend Dr. Alexander Elder's books on position sizing. Gaddis does some great information on asset allocation. So recommend you check out those. I try to answer what questions I could in the chat room. So with that, let's look at what's going on the rest of the week before we leave. Tomorrow we have Dan Russo coming in from Chaikin Analytics. Julius will be joining us Thursday for some RRG, and Friday we have everything stock charts. And then on Monday and Tuesday of next week, Tom will have a special guest host, Julius DeKempener.
Yeah, that's actually 521, not 519.
Oh, yeah, that's true.
Yeah, he'll be.
Yeah, you're not here Saturday.
No, not going to be in here on Saturday. Just want to make sure no one comes in looking for me on Saturday. It won't happen. But Julius is joining me on Monday and Tuesday of next week, as Erin won't be with us. So we will miss you, Erin, but I'm sure Julius will fill in quite adequately for sure.
Indeed.
And that's it. So another great show. Appreciate everybody stopping by. Always a pleasure to have you here. Please remember to complete that survey as you exit. We'd love to get your feedback, hear what you think of Market Watchers Live. Also, with Erin's workshop today, I'm sure she'd like to get some feedback, what you thought of her presentation. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. Hopefully, we'll see you back here on Wednesday. Happy trading.
Here's how to add a moving average for the volume on your charts. You can't use this volume component here, so go down under Indicators, select Volume from the drop-down menu, and then put the period that you'd like on it, and you can specify the color of the moving average line. Click Update, and that will give you this nice little line on here so you can see if it's above or below average volume.